There is a woman in Sapulpa, Oklahoma, named Roselyn. She is 77 years old. Last spring, she sat down at her kitchen table with a shoebox, a pair of reading glasses, and 3 years of unopened mail, and she found out that the Social Security Administration had been paying her $62 a month, less than it owed her. Not last year, for 11 years. Nobody stole it. Nobody committed a crime. A single year of her working life, 1979, the year she got married and changed her last name, never made it onto her earnings record. 1 year. One missing line on a government printout. $62 a month times 12 months times 11 years. And here is the part that made me want to make this video. The form that fixed it is free. It is 4 pages long. It took her about 20 minutes at her kitchen table. And in 52 years of working, paying in, and raising 3 children, not one person ever told her that form existed. $62 a month does not sound like much. Run it out. That is $744 a year. Over 20 years, with the cost of living raises stacking on top of it, that is more than $18,000. And Roselyn's form is the smallest of the 3 I am going to show you today. The second one is worth up to half of your entire benefit, paid on top of your check every month. And almost nobody claims it because they are certain it does not apply to them. And the third one, the one I am saving for last, because it is the biggest by a mile, is the one that undoes a decision you probably think is permanent. If you claimed Social Security early, and you have regretted it every month since, there are 2 doors written into the law that let you go back. Most people at your Social Security office have never mentioned either one out loud. So here is how this is going to go. 3 forms. For each one, I will tell you what it actually is in plain English, what it is worth in real dollars, exactly who qualifies, and then the exact words to say when you pick up the phone. Because the words matter, and the wrong words get you transferred into a dead end. My name is Ellis Grant. I am not a lawyer. I do not work for the Social Security Administration, and I do not make a dime whether you file these or not. What I do is read the rules, the actual published rules, the ones written in the kind of language designed to make you give up, and then say out loud what they mean for your money. And before we start, I need you to hear one thing, because it is the reason most of you would close this video in the next 90 seconds. I do not care if you are certain you make too much. I do not care if you already called once and a nice young man told you no. I do not care if you are 79 years old and you think the window closed on you decades ago. Every single one of these 3 forms has an exception in it that covers exactly the situation you are about to use to disqualify yourself. The people who lose this money are almost never the people who do not qualify. They are the people who decided they did not qualify and never asked. Stay with me. This one is worth your 20 minutes. Before the first form, let me answer the question I get more than any other. If this money is real, why has nobody called me? The answer is not a conspiracy. It is simpler and, honestly, worse. The Social Security Administration is a payment agency. Its job is to process what you file. It is not a review agency, and it is not your advocate. There is no clerk anywhere in that building whose job description says, "Check whether Roselyn is being underpaid and call her." That job does not exist. The system is built to answer questions, not to ask them on your behalf. So the entire machine runs on one assumption, that you already know what to ask for. And how would you know? These forms are not advertised. They are not in the welcome packet. They have names like SSA-7008 and SSA-521, which are designed to be filed, not to be understood. That is the whole trick. Not a secret. Not a scandal. Just 3 pieces of paper sitting in a public library of forms that nobody reads, on a website you were never told to visit, doing nothing at all until somebody signs one. Today, that somebody is you. Form number 1 is called the Request for Correction of Earnings Record. Its form number is SSA-708. Here is what it does, in one sentence. It makes Social Security fix a year of your working life that is missing or wrong on their books. Now, why does that matter so much? Because of how your check was calculated in the first place. Social Security does not look at your last job or your best year. It takes the highest 35 years of earnings across your entire life, adjusts them for inflation, and averages them. 35 years. If you only have 33 years of recorded earnings, they do not average 33. They put in 2 zeros and average 35 anyway. So a missing year is not a small thing. A missing year is a zero pulling down the average that your check is built on. And that average was locked in the month you claimed. And it has been quietly shrinking your payment every month since. What is it worth? For Roselyn, a single missing year at 1979 wages was $62 a month. I have seen corrections come in lower, around 40. I have seen them come in over 100 when someone was missing 3 or 4 years of self-employment income. Call it $40 to $100 a month for the rest of your life, with every cost of living increase calculated on the bigger number from then on. Now, who qualifies? And I want you to listen closely here, because this is where most of you are about to talk yourselves out of it. You qualify if there is a year missing or understated on your earnings record. That is the whole test. And the reasons a year goes missing are so ordinary, you will recognize yours immediately. You changed your name when you married or when you divorced, and one employer kept reporting under the old name. An employer typed 1 digit of your Social Security number wrong. You were self-employed and the income never got posted correctly. The company went out of business and its final wage report never got filed. You worked a few months under a supervisor who paid you off the books of the main payroll. Now here is the objection I hear every time. Ellis, that was 40 years ago, it is too late. Let me handle that head on, because it is the single most expensive wrong belief in this entire video. There is a time limit written in the law. It is 3 years, 3 months, and 15 days after the year the wages were paid. If you stop reading there, you would conclude that everything before 2022 is gone. But the law does not stop there. It goes on to list exceptions, where Social Security can correct the record at any time, with no deadline at all, and the exceptions are not obscure. They cover an obvious clerical error. They cover fraud. They cover wages credited to the wrong person or the wrong period. They cover a correction supported by tax returns filed on time. Read that list again and notice something. The exceptions describe exactly the way records actually go wrong in real life. The deadline mostly applies to someone who simply changed their mind about what they earned. It was never designed to lock out the woman whose married name did not match her payroll file. So do not disqualify yourself on the calendar. Let them tell you no in writing after they have looked. Milton Crane, 74, in Terre Haute, Indiana, spent 19 years driving a delivery route and 11 years before that running his own small engine repair shop out of a garage. When he finally pulled his earnings record, 3 of the shop years showed 0. He had the tax returns. His late wife had kept every one of them in a filing cabinet in the basement, in order, for 38 years. He filed the SSA-708 sent copies of the returns, and 7 months later his check went up $91 a month, with back pay to the date he filed. Here is exactly how you do it. First, get your earnings record. Go to the Social Security website and open a My Social Security account, or call and ask them to mail you a paper Social Security statement. Then sit down with it and read it one line at a time, top to bottom, and look for two things: a year that shows nothing and a year that shows far less than you know you made. Then call 1-800-772-1213 and say these exact words: "I have reviewed my earnings record and I have found a year that is missing. I would like to file a request for correction of my earnings record. That is Form SSA-521. I have evidence for that year, and I want to know exactly what documents you need from me." Then write down the name of the person you spoke to and the date. Every time, every call. Now stop, because I have to interrupt myself, and this next minute might save you more money than the whole rest of the video. The moment anyone starts talking publicly about Social Security back pay, a certain kind of business shows up. They advertise on daytime television and on the radio between the church programs. They will offer to recover your unclaimed Social Security or to fight the administration for you, and they will ask for a percentage of whatever comes back, or a flat fee of a few $100s up front. Here is what you need to know. Every form in this video is free. Filing them is free. There is no filing fee, no processing fee, no expediting fee, and no such thing as paying to move to the front of the line. If somebody wants a cut of your back pay to file a retirement form, that is not a service. That is a toll booth on a public road. And the other one, the phone call. If your telephone rings and a voice tells you that your Social Security number has been suspended, or that there is a warrant, or that you must confirm your number to protect your benefits, hang up. Do not answer questions. Do not be polite. Social Security does not suspend Social Security numbers. That is not a thing that exists. The call is a theft in progress. Real Social Security contact comes by mail, on paper, with a form number printed on it. Now let me show you form number 2. Form number 2 is the SSA-4. Its full name is the Application for Child's Insurance Benefits. Here is what it does in one sentence. If you are drawing your own retirement check and there is a child in your household who depends on you, that child can draw a benefit on your record too. Money paid on top of your check, every month. That costs you nothing. The number. A qualifying child receives up to 50% of your full retirement benefit, not 50% of what you get. 50% of your full benefit amount. If your full amount is $1,800, that is up to $900 a month coming into the house. There is a household cap. The total paid on one record generally lands somewhere between 150 and 188% of your full amount. But the point stands. This is the largest monthly number in this video, and there is a second piece that nearly nobody knows. If you have a child under 16 in your care, your spouse can claim a benefit at any age. Not 62, any age. It is called a Child in Care Spouse's Benefit, and it exists precisely for households like yours. Now, who qualifies? The child must be unmarried and either under 18 or 18 and 19 and still a full-time student in high school, or any age at all if they became disabled before turning 22. And now the part that most of you need. That adult disabled son or daughter living in your back bedroom, the one you have supported for 30 years without a dollar of help. If the disability began before age 22, They can draw on your retirement record at any age for as long as the disability lasts. That is not a special program. That is the standard rule, and it has been on the books for decades. Grandchildren can qualify too, in specific circumstances, and this is the piece that makes people put the video on pause and go get a pen. If you are raising a grandchild because that child's own parents are deceased or disabled, or because you legally adopted them and the child began living with you before age 18 and you were providing at least half of their support, that grandchild can be treated as your child on your record. Here is the self-exclusion I need to break. Almost everybody hears child's benefits and thinks, that is for widows, that is for orphans, that is for people on disability. It is not. It is on ordinary retirement records, and it has always been. The reason so few claim it is that the sentence, "you are retired and you are raising a child," describes fewer people than it used to. But there are millions of them, and most are being told nothing at all. Juanita Voss, 68, in Alamordo, New Mexico, took in her grandson when he was 9 after her daughter passed away. She claimed her own retirement at 66 and never said a word about the boy because the boy was not her child and nobody asked. He was 14 when a woman in her church group mentioned this rule out loud. She filed the SSA-4 and the record showed she had been supporting him entirely since he was 9. He was approved. It is a little over $800 a month coming into that house now, and it will run until he finishes high school. Here is how you claim it. This one you generally cannot finish online. You call and you make an appointment, and you bring the child's birth certificate, the child's social security number, and whatever proves the relationship and the support. Guardianship papers, adoption papers, school records showing your address, the parent's death certificate if that applies. When you call 1-800-772-1213, say this: I am receiving retirement benefits and I have a child in my care. I want to file Form SSA-4, an application for child's insurance benefits. I also want to be screened for a child in care spouse's benefit. Say all of it. The second sentence is the one they will not volunteer. Now, the one I have been saving. This is the biggest, and it is the one that undoes a decision you have probably been told is permanent. If you claimed Social Security early, at 62, at 63, at 64, your check was cut. Claiming at 62 with a full retirement age of 67 takes about 30% off your benefit, and it takes it off forever. Millions of people made that decision in a hard year and have paid for it every month since. Here is what I want you to hear. That decision is not necessarily final. Congress wrote 2 doors into the law, and hardly anybody walks through either one because hardly anybody is told they are there. Door number 1 is Form SSA-521, the request for withdrawal of application. Within 12 months of your first payment, once in your lifetime, you can withdraw your claim entirely. You pay back what you received, everything paid on your record, including anything a spouse or child got, and then, legally, it is as though you never filed at all. You can claim again later, at an older age, at a permanently higher amount. That door is narrow, 12 months, once. And you need the cash to repay. If you claimed within the last year and you regret it, stop the video and go look at the calendar, because that clock is running right now. Door number 2 is wider, and it costs nothing to walk through. It is called voluntary suspension. Once you have reached your full retirement age, you can ask Social Security in writing to suspend your payments. No repayment, nothing owed. And for every month your benefit sits suspended, up to age 70, you earn delayed retirement credits, 2/3 of 1% per month, which is 8% per year. Do the arithmetic with me, because it is the best arithmetic in this video. Someone who claimed at 62 took roughly a 30% cut. If that person reaches full retirement age at 67 and suspends until 70, that is 3 years of credits, about 24% added back onto the benefit, permanently, And every cost of living raise from then on is calculated on the bigger number. On an $1,800 check, that is roughly $430 a month for the rest of your life. Now I am going to tell you the catches, out loud, because anybody who sells you this without the catches is selling you something. While your benefit is suspended, you get nothing. You need other money to live on for those months. Second, anyone drawing on your record, a spouse, a child, stops too, with one exception. A divorced spouse keeps getting paid. Third, if your Medicare Part B premium is being deducted from your check, there is no longer a check to deduct it from, so Medicare will bill you directly, and you must pay those bills or you can lose the coverage. Write that one on the calendar. Eldon Pritchard, 68, in Waterville, Maine, claimed at 62 in a bad year when the mill cut his hours. He spent 6 years telling himself he had cost his own family a fortune. Then he sold a piece of land his father had left him. At 67, he suspended his benefit, lived on the land money for 34 months, and turned his payments back on at 70. His check came back $407 a month higher than it was, and it will stay that way for the rest of his life, and his widow's benefit will be figured on the bigger number too. Here is how you do it. Suspension is a written request. You can call, but put it in writing and keep a copy, and confirm in writing what month the suspension starts and what month it ends. The exact words: I have reached my full retirement age. I want to voluntarily suspend my retirement benefit beginning next month, and I want delayed retirement credits to accrue until age 70. Please send me written confirmation of the effective date. And if you are inside that 12-month window instead, I want to file Form SSA-521, a request for withdrawal of application. Before I sign anything, please send me in writing the exact total amount I would have to repay. Never sign that one before you see the number in writing. Why does any of this matter more right now than it did 5 years ago? 2 reasons. First, every one of these fixes is a percentage of a benefit, and benefits have risen sharply with the last several cost of living increases. 8% of today's check is a bigger number than 8% of the check you were looking at in 2020. The same form is simply worth more money than it used to be. Second, and this is the one that should get you off the couch, the earnings correction has a clock on it, and every one of these takes months to process. 7 months for Milton. A year is not unusual when documents have to be requested from a dead employer or an old tax year. A form you file in August pays you. A form you file next spring pays you a lot less. And a form you keep meaning to file pays you nothing at all. Let me put the numbers together, and let me be honest with you about them. Almost nobody gets all 3 of these. The earnings correction, call it $62 a month, $744 a year. The child's benefit, on the example we used, $900 a month, $10,800 a year. The suspension, $430 a month, $5,160 a year. A household that qualified for all 3 would be looking at more than $16,000 a year, and past 20 years with cost of living raises stacking on it, north of $300,000. But you are probably not that household. You are probably a one-form household. And I want you to hear this clearly. 1 is enough. One of these, filed this month, is worth more than everything most people do with their money in a year of worrying about it. I want to go back to Roselyn Tackett in Sepulpa, because there is a part of her story I left out. When her correction came through, she got back pay to the date she filed. Not to 1979, not for the 11 years the mistake was actually costing her, to the date she filed the form. That is how it works. The money that was already gone stayed gone, and the only piece she could reach was the piece from the day she finally picked up a pen. She told her daughter afterward that the thing that bothered her was not the money. It was that the box had been sitting in the hall closet the whole time. That is the entire lesson, and it is why I keep making these. The difference between the seniors who get this money and the seniors who do not is almost never eligibility. It is a form, an afternoon, and somebody telling them out loud that the form exists. So here is your list. Write these 3 numbers on a piece of paper and put it where you will see it tomorrow. SSA-7008, Request for Correction of Earnings Record. Pull your earnings record first, look for a missing year, and do not let the calendar talk you out of it. SSA-4, Application for Child's Insurance Benefits. If there is a child, a disabled adult child, or a grandchild in your care, call and make the appointment and ask about the child in care spouse's benefit in the same breath. And the big one, voluntary suspension at full retirement age, or Form SSA-521 if you are still inside your first 12 months. 8% a year for the rest of your life, in exchange for a written request. The number for all 3 is 1-800-772-1213. It is free. It has always been free. I am not a lawyer, and this is not legal or financial advice for your specific situation. It is a plain English reading of published rules, and your own facts matter. So verify everything against what Social Security tells you in writing. And do me one favor. Send this to somebody you love who is over 65. Not because of me. Because there is a decent chance that one of them is sitting on a missing year, or raising a grandchild, or has spent 6 years regretting a decision that turns out not to be permanent, and nobody has ever said any of this to them out loud. Nobody is going to call you and explain what you are owed. That part was always up to you. I will see you in the next one.